GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
Well, so often we end our show with a question, but why not mix things up a little bit? Let's start off with a question, and it comes from our good friend Frank de Beer in Belgium. Bob, last week the market blew out the Dow theory non-confirmation. This was the fourth time in 2 years a non-confirmation setup was blown out. It is a sign that the bull market is still alive and kicking. It seems that this is the bubble that just does not want to pop. Is it really a bubble? Can you tell us why this is a bubble and how it could all unravel? Well, thank you very much, Frank. And back to you, Bob.
Good question. And first of all, the Dow theory is whereby when you're on a bull market, you have to have both the Dow Industrials and the transport index, which used to be called the rails, in uptrend. So you got the transports confirming the industrials. And that worked very well for us in 2015 when there was a major non-confirmation, and then this year there's been a non-confirmation. But as Frank points out, the Dow transports have gone up and made a new high. But the only answer I got to that is there's a lot of exuberance one would expect at a topping bull market, which is what we're happening. And also, we looked at it, and in the summer of 2007, the Dow got up and made a new high and non-confirmed that, or confirmed that it was a bull market, and then it all changed. Now, what we'd rather, now the other part of the question was that about a bubble, and oh yeah, is this a bubble? You've got some stocks have been going straight up. You have real long interest rates, like for low-grade bonds, going down. You have the real price of gold not going down, but it has been down for some years. And so you've had a couple of those major signs that are tend the end of a bubble. And mainly it's just the excitement. Now, what we're looking for now would be the credit markets changing. Now, the yield curve has been working on a change for many, many weeks. And the other one is the credit spreads, which is the difference between high-grade bonds and low-grade bonds. In confident markets, the spread difference between the two narrow in, which they did into March, April. And then there's been no narrowing since. But in the last few weeks, there has been some widening, and indeed we've got it widened beyond the previous highs. So there's, it's a bit of a breakout on setting up the reversal. So we've been calling this the first breakout, and in past, like in 2007. The first breakout happened in the middle, in late June, and then the second one was late July. So, and then in 2000 itself, which was the dot-com bubble year, you had that all compressed into the first quarter, but there was still a lead from when the spread market started to reverse, and when you had the first, and then you had the second breakout on that. So, what we're looking, we also, Jim, we played that in 2014 with when the oil market started to head south. the spread market started to widen, and in it did the two breakouts as well. So it's been pretty reliable in giving an indication of when the most speculative side of the bubble would fail. So what we're waiting for now is the second breakout on the reversal to widening spreads. And I think it could happen maybe in August sometime. But what you would also look for as part of that would be weakening industrial commodities like base metals, crude oil, and lumber are the three sort of industrial commodity sector we watch. And actually today is a nice down day for crude oil. But I think the markets, the financial markets and the base metals and spreads can all sort of be quiet to steady into August, and the New York market would make an attempt at a high in September, because typically you get at the end of great bubbles, in Europe and London, they can set a peak in around June, and that seems to be working on here now. And then in the New York market, since it became a more important market in 1873, in a bubble year, and such as 1873, 1929, and 2007, the high was the first two were in September, and then in 2007, the high was in the middle of October, so not far off of the historical pattern. So for Frank's question, we thank him, and also to conclude, it is definitely a bubble. And using 2007 as the example, there was a non-confirmed, or the Dow Transports did confirm the bull market in July. So that's going to be intriguing.
We'll have more with Bob Hoye right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with Bob Hoye. Bob, earlier this week, a couple of the American markets did hit record highs. What is that telling us?
Yeah, that's happening. As I said, it may be able to make highs into September. That would be within the historical pattern. And you've got people talking about Goldilocks conditions, whereby it's not too hot and not too cold. But hey, you take a look at technical indicators such as our upside exhaustions and other sentiment figures, and the really dynamic thrust into June. There was all kinds of up there, let's call them tilt signals. So you've had a great deal of exuberance in the markets, and then, well, we never talk about prices or earnings, but the PE ratio on real is high. But then, of course, the reason why you have stock market analysts is to project earnings out so high that it brings the calculation of the PE down so that people will be comfortable with stocks, which is a bit of an irony there. So we'll stay with our tried and tested methods that you get exuberance, and then you get changes in the credit markets, and that these credit markets are making the changes, and it's just a matter now of timing, where, as I said, The U.S. market could continue to be firm into August and maybe just into early September. That would be supported by everything being okay. But then when we look at the credit spread market, which we've talked about, on that second breakout in the turn to widening credit spreads, that's a very sophisticated market, you know, Jim. You've got very talented people on bond trading desks, and they're adjusting for risk, and they start to change their mind about risk, and it changes them. Now, here's the other thing, is that as I mentioned, some of the stock analysts are there to make sure the PE ratios are not looking excessive. And then the other one is that they feel that the central bank can prevent bad things from happening. And that has been a comment that has come out with where the Federal Reserve in the U.S. and the Bank of Canada have raised their discount rate or administered rates, so that they then, at the sign of trouble, can lower them. So if you look back in business history, when it's an unmanipulated market, you have short-dated investment-grade interest rates like for Treasury bills. Well, they go up in a boom. And the other thing that is actually stamped in stone is that such short rates go down in the bust. And if one gets really screwed up on cause and effect, you can look at 2007, when the faster the central bank in Canada and the Federal Reserve in the U.S., the faster they lowered their administered rates, the more the stock market went down. So now that's being ironical, but the main issue is that quality short-dated rates go up in a boom, and rising rates confirm that you're in a boom. Now, the Treasury bill rate, the 6-month rate, has come from almost zero a few years ago up to 1.15%. Now, that's no big number, but it's ticked back to 1.10%, no big deal, and then uptick to 1.12 here recently. But we're watching for Treasury bill rates to go down because it will be the sign that the demand for speculative money at the short end is beginning to ease. So that's a little trick that not too many people are aware of. And, of course, the only reason why I became aware of it was in looking at what happened in 1929. In June of 1929, the Treasury bill rate started going down because speculation had run its course. The economy was starting to slow, and then it led the Federal Reserve. It didn't cut their rates until October. And this, again, is the pattern going back to when the Bank of England was the senior central bank on the bubbles, like from 1873 on. They would follow market rates of interest up with their changes in the administered rate. And then before the actual biggest signs of the boom were over, the decline would be in the credit markets, and T-bill rates would start coming down. And then maybe 3 or 4 months later, the senior central bank would lower its rate. So whereby there's so many Fed watchers now watching the Fed, it's totally absurd. There's no point watching because they'll be following changes in market rates. And then the other point is that they can push interest rates down, but when you have a speculative market such as we've had, the yield curve and credit spreads will do what they do in any boom, and just using the spreads for the moment, they will narrow until the boom is over. And then when they start to widen, and as I mentioned, that's very sophisticated players there, then that's a heads up. And so far we've had the first breakout in widening, and we're now watching for the second breakout. So we're close to the end of speculation, but the up is there until, and like you take the S&P, which is the one we watch, until it actually reverses, and the S&P could continue up into September. But the warning signs are already showing.
We'll have more with Bob Hoye right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, you have an interesting comment on weather headlines and climate alarms. What is that comment?
Well, actually, a long time ago, I completed a degree in geophysics. And part of that study is ice ages and interglacials and what they now call climate change. So I've been interested a long time, and for the last 30 years, as evidence has come out, it's been incredible. But ice ages and interglacials come and go on a fairly regular basis, and there's more and more understanding of the mechanism behind it. But we could be changing from recent warming to a cool trend, and that would be based upon the sun going into what could be a significant solar minimum. And one thing that you've known, researchers have known for hundreds of years now, is that the solar cycle, when you have a declining solar cycle, is associated with cooling trends in the climate. And nowadays, with science being what it is, there's some solar physicists who forecast in the 1990s that we would go into a solar minimum. And the last two solar cycles, 23 and 24, have been declining. And now we're back into zero sunspot days. And that has been associated with cooling. So we could be in the transition to a cooling trend. But you have the promoters of climate alarm. They're still in warming. So here's some headlines. February 23rd, Science Magazine, The Great Greenland Meltdown. Now here's, in July, the headline was Record Cold in Greenland, minus 33 Celsius, and they figure that that was probably the coldest ever recorded in the Northern Hemisphere in July. So then another one here, The Guardian, April 14th, Greenland is melting fast. But if you go over to the Danish meteorological office and look at their chart, they keep a track of a calculation on Iceland's ice. It's called the mass ice balance. And the season, of course, when the ice grows is September until July. And if those headline writers at The Guardian in April had looked at it, they would have realized that the trend, the ice build, was exceptional, one standard deviation above the mean. So on one side you have actual calculations of ice in Greenland growing exceptionally. And then you've got The Guardian saying that the Greenland ice is melting fast. Now, even right into more in the summer, June 28th, Science Daily writes, more summer sunshine, increased Greenland ice melt. And then you got a July headline, near record ice growth in Greenland. But then there's more to it, Jim. NASA, on July the 12th, writes, Antarctic Peninsula, one of the fastest warming places on the planet. Then in July you got a headline, unusually cold Antarctic air hitting South America. Another one, coldest in 110 years in Southeast Australia. And that one, Jim, the weather people in that part of Australia warned people not to take their barbecues inside for heat. It's dangerous. But they had to warn the Aussies not to take their Barbies inside. So there's a huge divergence between what is actually happening with, weather and what these guys are writing about recent conditions. Here's another headline. The coldest minimum in St. John, New Brunswick on July 14th, a record since 1871. Ontario, the wettest summer in 150 years. And the mainline climate alarm people are going on about droughts and all that sort of stuff, and heat and droughts. Well, it's just plain not happening, and if people want to look at this set of headlines, which is really amusing, they can look it up on our website at institutionaladvisors.com.
Well, Bob, I maintain humans can't control climate at all unless we can control volcanic eruptions, the tilt and orbit of the Earth, sunspots, and asteroid hits.
Yeah.
That
is a really good way of saying it. That, what I've been doing is that the boasts that committees of bureaucrats can manage the temperature of the planet. I mean, these are attributes that were normally only assumed by God. So these bureaucrats, they have the powers of God now. It is amazing. But I like your phrase that, of course, to influence the climate, we have to change the tilt of the Earth and the shape of the orbit as it's revolving around the sun, and you have to change the energy output of the sun. That's a good way of putting it, Jim.
And also carbon taxes. How, one volcanic eruption, Pinatubo, for example, in one day wipes out 10 years worth of carbon credits. So how does taxation change that?
Yeah, it makes the exercise useless, particularly as carbon dioxide has nothing to do with real climate change. It's just absolutely nothing. But you understand that IPCC, United Nations agency, its mandate was to investigate only one thing: carbon dioxide, climate, and mankind's output of carbon dioxide. They got one subject when actually the subject of climate change and the influences on it is a number of things. As you said, it's orbital mechanics, it's the amount of output from the sun, it's cosmic rays from outer space and cloud covers and all that sort of stuff. This is why Ontario is suffering such a wet summer, is because the cloud cover is increasing. The cloud cover is increasing because we're on a solar minimum, which allows more cosmic rays through. More cosmic rays precipitate more water particles, more clouds, more precip, more cover, more cooling. It actually is a wonderful big clock, and the beauty of it is amazing. And yet, you've got these narrow-minded views on it that only one thing counts in climate, and that's mankind's output of CO2. I mean, how simple-minded can you get?
When Captain Vancouver visited Glacier Bay in Alaska 300 years ago, the ice was right at the edge of the bay. Today, there's only 2 little glaciers left on land. The bay is virtually ice-free. Are they saying that humans caused all that over the last 300 years?
They're saying that.
Bob?
Saying that. And they're all worried about ocean going up by 2, 3, or 5 feet, or Al Gore goes, and when he's really wound up, 20 feet. In the last 10,000 years, the sea levels have increased by 300 feet, as most of the ice at the poles melted. There's not much ice left when you actually look at it, relative. I mean, you take on the last glacial age in North America, the ice was all the way down to Chicago, and at its depth it was maybe 2 miles deep. So that was a whole lot of ice to melt, and that's what really drove the ocean levels up. I mean, recent stuff in the last 1,000 years, there's been very minor rate of increase, and that rate of increase is not changing in the last 150 years as people have got concerned about, the change to an industrial economy. But it will go down as one of the greatest delusions and biggest frauds in history, the idea that committee bureaucrats can manage the temperature of the earth.
Well, on that note, Bob, I think we have some showers planned here in British Columbia this weekend, which with all the forest fires burning is good news.
That is good news. Slightly cooler, a little damper will be good.
Bob, have a great weekend.
You too.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our very popular YouTube channel is Talk Digital Network. You can forward questions to the show or Bob at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.